I'm going down. I'm going down. And round, baby. My whole world's upside down. Welcome to another episode of Cheef and Chart. It's your man Don Bucks. This is brought to you by Rap and Dough, the home of money conversations and all that. But this is episode Sour Widow, and the spy is doing what the chart said it was going to do, fam. And if you've been tapped in, you'll be up right now. You'll be up. So if this is your first time tapping in, man, we talk about options trading because you know what Rap and Dough. We talk about all things Black wealth, the issues, but also the solutions. And this is one of the solutions that I bring to the table: options trading. So make sure you hit the make sure you hit the option. Make sure you hit the notification bell and the like and subscribe button so you can be notified when I come bring these gems, y'all. But yo, the spy is doing what we said it was going to do yesterday. And it's doing what we said it was going to do the day before that. Right? This is why I created Cheef and Chart. Because the chart tells us what to do. The key is knowing what the chart is saying. So I'm also on here on Sundays with my series called What the Chart Say Sunday. So I'm on here giving these gems. So if you haven't took my course, you pretty much get my course every day when I come on here showing you what plays I'm making, what I see on the chart. But quick update, y'all. Y'all know I've been trying to get my skating lessons on. Not trying, but I've been going to take skating lessons. And if you want to learn something, man, you got to get yourself a coach. You gotta invest the time and the money sometimes to learn what you want to learn. So every Wednesday, I was going, but now I done turned it up a notch. And I found another skating rink that have lessons on Mondays. Yeah, so on Mondays. So I go on Mondays and Wednesdays now. So I'm noticing that I was working on my, some people know how to skate backwards. I never learned how to skate backwards. So that was one of the things I said, you know what, I gotta learn this stuff, man. Usher ain't gonna be the only fly joker rolling around here. Nah, I need that. I need parts. You feel me? So I've been getting right. And today was yesterday and today was a milestone because I learned backwards these past couple months, but now I'm doing the backwards cross pull. Now, if y'all know what the backwards cross pull is, y'all probably caught Meek Mills doing it because a couple people have got on the skating bandwagon ever since Usher came floating through. But yeah, so it's this way backwards, and then you alternate your feet going backwards. So I picked that up. I got it. So now it's about perfecting it. And that's the same thing with options, man. It takes practice and really wanting to learn it. That's how I learn it. That's how I learned it. And I'm still learning. I'm perfecting it now. Just like I'm perfecting that back cross pull, I'm perfecting my options now. Like I got it, but now I'm perfecting it. And if you've been paying attention, you'll be perfecting it too. So let's get into this chart. So the SPY, man, what we say yesterday, right? What we've been learning. We've been learning momentum divergences to the upside and the downside, right? We've been learning that. And what did we say? What day was this? Friday. Friday was the 16th, right? So let's make this bigger. So Friday was the 16th. Let's bring this. Y'all see? The 16th was this green bar here. Y'all see that? 16th was this green bar. That was Friday. And once it broke through here on Thursday, it gapped down. through this support. So it retraced. And y'all know once support is broken, it becomes overhead resistance. So it retraced up because that's normal price action, down, up, right? Or when it's going up, it goes up and then retraces down, up, retrace down. So this is normal price action. It broke support and now it retraced up to test it. Now it's resistance. So it's testing it, but if we know what we're looking at, we look down here in our momentum indicator and it shows a new low in the fast line. So that is called a momentum divergence. When you see weakness or downwards momentum in the MACD, but corresponding strength up top after a retracement to resistance, that plus that equals a put, because this is downwards momentum, this is normal price action. That's saying that it's going to reject this at resistance. That's what that's saying, because we need to be positioning for puts in this strength, but we need to find out how much strength, how far is this going to go up and retest, because we know it's going back down based off the momentum, right? The momentum indicator. This is the MACD. We know it's going down, right? But when? When is this green bar going to be over? I'm glad you asked. That's when we drop down into our trading time frame. I use the 2 hour. So boom. This is where it gapped down. This is that retracement. So when you drop down to a trading time frame, you got to take into consideration that the trading day is approximately 6 hours, 6.5 hours, something like that. So that one bar in the daily, you can't see everything that's going on in there. So as you can see on the 16th, the day we're talking about has 1, 2, 3, 4 bars that represent that whole day, right? So now you can see what's going on in that day, not just that one bar from the daily. So in order to see, you have to drop down. So this is how we know when the strength is going to be over. When this stops going up, that's when we can position for our puts, because we know it's going down based off of the later time frame. Because remember, that whole more weight holds precedent. Whatever's going on here, the downwards momentum, if you drop down the trading time frame, there's something going on different, it's going to be short-lived. That's why that retracement is short-lived, because it's going to follow suit with the later time frame. Okay. So we can't see everything that's going on in this red bar, but we do see that it dropped and closed below resistance. Below support. And then after hours, it came down even more. Y'all see that? Let me make this screen bigger. Look, see the blue? Let's say post market. It came down even more. So it closed at 377. So that's how this is really coming down here. If you was tapped in yesterday, I told y'all what was going to happen. All right. So if you haven't already, make sure you hit that notification bell right now, because if you haven't made money yet, maybe you'll start listening to me and start making some money off of what I'm saying, because this is gold. If anybody know, they say if you know, you know. If you know, you know. What I'm saying right now is gold. So you can't see what's going on in here. So drop down. We know it dropped. We know it went down below support. Right? It's going down. Now, what I will be thinking, it dropped below support. I'm going to automatically look for a retracement to test. Now that support is now overhead resistance, because normal price action is retracement after a drop, right? So we drop down into the trading time frame to see where that retracement is. It didn't retrace yet. It's just going down. So I'll give it one more bar before it goes down. Because remember, side eye anything after 3 bars in any direction. It's due for a pullback. Any more than three or more bars, look for a retracement. So this is due for one more bar, at least, before I see a retracement to try to test this resistance. All right. Let's see. Let's drop down to the relatable, which is the half an hour. Nope, no retracement yet. It's just down there. Y'all see that? It's going down. So tomorrow, expect more downward pressure. Because as you can see, what happened after hours, it dropped down to $2 more after hours. So tomorrow it's going to open down here. More downward pressure tomorrow. So what I was playing is the one that's in opposition from the SPY. So if the SPY is going down, mine is going up. All right. So this is what I did today. So if y'all been following, y'all know I've been playing this stock. So I was kind of shaky. It was kind of shaky earlier, but I held tight. I held my ground because I knew what I was looking at. And y'all gonna know what y'all looking at. So what was yesterday? Yesterday was the 20th. All right. So boom, the 20th. Boom, is here. So of course I took profit. Let's go to the daily. Daily time frame. So boom. I seen strength in the MACD Friday. I was in it here. Monday opened up, it dropped down, and then it came here. I took profit here. Waited for it to come down. I explained this yesterday, but I waited for it to come down. I still seen, because remember, natural price action is once it goes up, it retraces. So how do I know it retraced? I was in my trading time frame. And the 20th, let's see. So Friday. This is Friday. So this was Friday. I held on because it dropped down to this support level right here, and I added to it. Then yesterday took profit here. So I averaged down. So yesterday I was talking about managing your trade, and that was part of it. So I stayed in it even though it was down, right? That's why you can't be over leveraging, because if you over leverage, meaning put too much money on the table and you can emotionally stand to lose, you probably would have sold this contract instead of adding to it, because I was down like 40% on the play, but it was my emotional threshold on the table. So I wasn't worried about it because I was monitoring what was going on here, right? I'm monitoring what's going on. I was like, wait a minute. No, I trust that it's going to bounce off of this level. And of course, I was monitoring the SPY, because if this is in opposition to the SPY, I need to make sure the SPY is setting up to go down, because I want this to go up because it's in opposition, right? So I'm monitoring the SPY for it to go down so I can monitor mine for going up. So I was like, okay, it came down and I added to it. Where did I add? Let's see. I added here. I bought another contract here. Then held it. Next day, why did I hold it though? Because on the daily, the later time frame, there's strength in the MACD. So I know it's going up, even though it's not showing in the bar. That's why it's called a momentum divergence. So I was like, it's going up. I just need to find the weakness. I need to find the weakness in that strength. So that's going to give me a better price on my contracts and give me a better position for it to go up from, right? So I seen the strength in the MACD in my later time frame, so that whole precedent. So I'm looking for weakness, right? So I bought another one in that weakness because I went to the daily time frame. I was like, oh, it's still strength in the MACD, and it's another new high. Bought another contract here, held it. Next day, took profit here. Boom, right? Went back to the daily time frame, still a new high in the MACD, a new high. So I waited for it to retrace again that same day. Boom. It dropped down to here. It dropped down to here. I hopped back in yesterday. So it went down. And I didn't buy another contract. It was down like 40% because I only had a 3-day contract. So the theta, the shorter your contract expiration, the higher the theta. And you know, theta is time decay. So every day you hold your contract, the theta is subtracted from the value of your contract. So that's why it's always time. It's always good to have more time on your contract than not. But I was kind of confident in this play happening immediately. I don't do anything less than, I usually try to do nothing less than 4 days, but being that Friday is right there, I'm like, I might as well just get the 3-day jump. It worked out because it dropped and then it bounced. I took profit again. Did I take profit again? No, I'm in it. So I sold this one, took profit, and I got back in right here. Actually, yeah, I sold for profit here and I got back in here. So I'm back in it and it's up again because we have another new high in the MACD. Like, it's going to the next level. And where's the next level? The next level is here, 27. Well, you might as well say 28. And I have, matter of fact, let me pull that John up if I can. Hopefully y'all can see this. I have, so this is what it looks like. Hopefully y'all can see that. But here it goes. So I'm up. I have a $25 strike price. And the next level up is what we just said, 28. So it's going, right? It's not overextended. We don't have 3 or more bars going this way yet. We only have really one nice one. So we got room. It's going here. I believe it's going here. Just like the SPY, I believe the SPY is, let's see, let's go to the daily. Just like the SPY is going here. So what do we have here? It's either going here at 367 or test 361. But with new low in the MACD, any strength in this, if you're playing the SPY, if you see any strength, which should be soon, I would be buying puts. But this is not financial advice. This is only entertainment and educational purposes only. But if I was playing the SPY, I would wait for this to continue down, retrace, make sure I still see a new low in the MACD, go to my trading time frame, and I'll look for that strength. I'll look for that retracement up to this resistance, and I'll do puts to the next level. You dig? It's Cheef and Chart, man. That's what's going on. Hopefully y'all following along, taking notes. But if not, feel free to hit the description and hit the link. Grab the intro to swing trade and options course. It's back on sale, only $50. So catch it before it goes back to 1,000. What else? I think that's it. So yeah, I'll see y'all tomorrow, man. And remember, ain't no competition. It's you versus you. Peace.